Welcome to Financialize. My name is Wayne Dlovu, and today's topic is about how credit scores work. I'll be making two videos on this, so there'll be some things that I won't be able to touch because I don't want to make this video too long. So that will be a second video that I'll make and release sometime later on. In any case, you gotta start with this video so you don't get confused. Let's start with the beginning. What is a credit score? You know me, I like to break down phrases. What does credit mean? Credit means to borrow. So if I credit money to you, I'm borrowing money to you. In any case, a credit score is it's a score that determines how well you are at handling money that's been borrowed to you. That's what a credit score is. Here's another question you might be wondering. Why is a credit score even important? A credit score is important because without it, we have no idea how good you are at handling money. And if we don't know how good you are at handling money, we will probably sell you expensive money or we won't sell you money at all. You're probably thinking to yourself, what the hell did Wayne just say? Okay, stick with me for a second here. They won't teach you this in school, so I'm going to let you know right now. If you go to ShopRite, the reason you're going to ShopRite is because they sell food. If you're going to Mr. Price, they sell clothes. If you're going to a bank, it's because the bank sells money. That's what banks do. They sell money for a price. The price of that money is called an interest rate. With that being said, if you go to a bank and you say to the bank, I want to buy your money, in other words, I want to take out a loan, they will say, okay, cool. How good are you at buying and paying back other people's money? That's where the credit score comes in, because the credit score tells the bank all that they need to know in order to answer that very question. This is why banks give people who don't have good credit scores very high interest rates. If you are good at handling your money, they'll say to you, okay, cool. Because you're good at handling other people's money, the money we will sell to you, in other words, the loan we will give you will be pretty cheap. In other words, very favorable or very low interest rates. That's why credit scores matter. Okay. Now, I'm going to explain a bit further in the second video, but one last thing I want us to touch on. What does a good credit score actually look like? Well, there are companies that calculate credit scores. We call these companies credit bureaus. Okay? Very fancy name, but it basically means, at least for the sake of this video, we're going to give them the definition of companies that calculate credit scores. Now, there are a lot of different credit bureaus in the world, but I'm only going to focus on two. The first one is called TransUnion, and the second one is called Experian. Now, at this point in the video, a couple of you guys might be thinking, okay, cool, Wayne, what about ClearScore.coza? I've seen their ads in between my Mzansi Magic TV shows. Well, ClearScore actually uses the credit rating provided by TransUnion. So that's why it's better to just talk about them as opposed to ClearScore. All right, speaking about these two companies, one thing you guys must understand is the fact that these guys calculate their credit scores differently. TransUnion uses a range of 0 to 999, and then Experian uses a range of 0 to 740. The only thing you should be concerning yourself with when it comes to having a credit score is having an excellent credit score. Now, the question is this: what does an excellent credit score actually look like? An excellent credit score, with regards to TransUnion's credit rating, is anything from 767 going up. And then with regards to Experian, it's anything from, if I'm not mistaken, give me a second, 658 going up. Those are excellent credit scores. All right, one last thing I want to touch on. What happens if you have an excellent credit score? If you are deciding to rent out a place, you're usually going to have lower rent. You're going to have a lower deposit. So sometimes when you approach a landlord and you say to him, okay, cool, I want to rent out this place, he'll say to you, phenomenal, let me have a look at your credit score, because your credit score will determine how good you are at paying back your rent. I understand rent isn't the same as borrowing money, but it still matters even in this context. Second thing, you want to get a nice car loan, a really nice one that you can actually pay back, have an excellent credit score, and you'll get just that. In fact, if you have a look at a website like We Buy Cars or Wheelie, you're going to have a look at the fact that they're either going to tell you the full price or the financing price. If you have a look at the financing price, it's going to say from X amount of money, not that money, from. So obviously you want to get the amount of money that they're showing, but you have that by having an excellent credit score. Another thing, if you want to get an insurance policy, then you're probably going to want to have a good credit score. Why? A good credit score means lower premiums. Okay, cool. That's all the time we have. I hope you got an idea about how credit scores work. In the second video, I'll be touching on how do you get a good credit score and how do you avoid messing up your credit score. See you in the next one.